Well, folks, there's a lot of money to be made in this market. We're going to go over 5 stocks I'm buying now, December 2024 edition. This is my favorite video I do for you guys each and every month where we get into stocks I'm buying. All 5 of these stocks we're about to go through in today's video all have major upside the next 24 months. And all 5 of these stocks we're about to get into all have little downside risk, in my opinion, in the next 24 months. And we're going to go through that in this video, okay? Now, additionally, I would say 95% of the people that watch this video, you've watched my videos before, you know I'm a long-term investor in companies, you know I'm going after the big money, right? But for any of those individuals watching this video, which might be 5% of the people that watch this video that have not come across my content before, just understand I'm a long-term investor. I'm going after the big money. I'm making tens of thousands, hundreds of thousands. I want to make millions of dollars when I go to buy a stock. I'm not chasing after $50 here, $50 there, those sorts of things, okay? So it's very important you understand that, okay? Alrighty, guys, this video took quite a bit of time for me to put together here. All I ask from you guys is one thing and one thing only. I hope it's not too much to ask. One favor, smash that like button, smash that like button, and smash that like button. Additionally, if you want to make sure you're subscribed here to the channel and have notifications on, so every time I come out with a new video on the channel, you can be notified. You can do that as well here on YouTube. It's all obviously free to do all that, okay? Now, additionally, for anybody that's looking to access my entire library of premium courses, click the pinned comment down there, fill out a form to get access to my private stock group. That's access to Become a Master of the Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery, Jeremy's Valuation Mastery. Additionally, you get access to see all the moves I'm making in my $2.9 million Fidelity account now, exclusive weekly videos from me, and part of my Discord chat with myself and all the 6, 7, 8-figure members, okay? Alrighty, guys, once again, that's pinned comment down there. First stock of these 5 stocks, and this is a pretty dang new buy for me. I love this stock. This is AMD. This is a stock I just started buying really in the past few days. And this is a position I would love to build out quite substantially over this next, I would say, this next few months. Now, when it comes to AMD, the stock's done a whole lot of nothing this year. It's down actually 1.5% in regards to this. But regardless of however the stock's performed in the past, it really means nothing to me. All that matters for me is the future. Now, when it comes to AMD, it's very important to understand they have 4 business lines at this company. 2 are what I call major business lines, and 2 are minor business lines, okay? The first is their big dog. This is data center. Now, this is a category that has had incredible growth over the last, I would say, 10 years and really has ridiculous growth over the next 5 or 10 years. Data center in the latest quarter was $3.5 billion it did from that business line. That was up 122% year over year. And I think this is just getting started. We got a long way to climb there. Operating income of $1 billion in that segment in the latest quarter. Client segments, their next biggest category with $1.9 billion of revenue. That was up 29% year over year. Operating income in that segment was $276 million, right? Now, additionally, and so those 2 majors are going to continue to grow quite strong, specifically data center over the next several years. And that's important to understand, okay? Now, additionally, the 2 minor segments, gaming and embedded. So gaming segment, $462 million. That's their smallest business line. That was down 69% year over year. Do keep in mind, I do expect that segment to go back positive with revenue, likely in either the second quarter or third quarter of 2025. So that's something to keep in mind there. Now, additionally, the last segment AMD has is the embedded segment. This segment, $927 million in the latest quarter, $372 million of operating income. That was down about 25% year over year. That's another business line that I believe is going to inflect positive in 2025. So I believe by about middle to the back half of 2025, data center will obviously continue to increase quite dramatically, client segment as well, but additionally you'll see gaming segment inflect positive and embedded segment all inflect positive in 2025. So that's going to be very, very exciting for the company. Now, additionally, some news came out in regards to AMD back in August, and no one really paid attention to this. And the reason no one was really paying attention to this is I got to take you back to August. August in the stock market of 2024 was a time when everybody was talking about kind of macroeconomic conditions. A lot of people were talking about, is the stock market going to crash? There was a whole Japanese yen carry trade situation. And so everybody was really focused on kind of not company specific things. They were focused on the markets in general and like what's going to happen with the stock market, not what's going on with individual stocks. Big difference there, right? But meanwhile, AMD announced a big acquisition, and this is substantial for the future of AMD. AMD to significantly expand data center AI system capabilities with acquisition of hyperscale solutions provider ZT Systems. Strategic acquisition to provide AMD with industry-leading systems expertise to accelerate deployment of optimized rack-scale solutions addressing a $400 billion data center AI accelerator opportunity in 2027. Now, my opinion on why they did this deal for ZT Systems here, right, and why this was announced, is I believe they did this because they need to. Why? In order to compete with NVIDIA, you need to be a one-stop shop. A one-stop shop to really compete with NVIDIA now at this point in time. NVIDIA's done such a phenomenal job of just being like everything. They've got it all for you. They've got the hardware, they've got the software, they've got it all. And so I've watched AMD do some acquisitions here recently, and I believe these acquisitions are to position them to compete directly with NVIDIA over this next 5 to 10 years, if not 15 to 20 years out, right? Which I think is very, very brilliant in regards to Lisa Su. She's a little behind Jensen in NVIDIA, which is clear. That's why NVIDIA trades at like a $3.5 trillion market cap and AMD trades at a $200-something billion market cap. But the moral of the story is Lisa Su and the team, they're coming around here. They're just a little behind Jensen. Now, in regards to what Lisa Su had to say about this deal, she says, our acquisition of ZT Systems is the next major step in our long-term AI strategy to deliver leadership, training, and inferencing solutions that can be rapidly deployed at scale across cloud and enterprise customers. Think of all the big money, big dogs out there. Think about the big techs that all need these sorts of chips, right? ZT adds world-class systems design and rack-scale solutions expertise that will significantly strengthen our data center AI systems and customer enablement capabilities. This acquisition also builds on the investments we have made to accelerate our AI hardware and software roadmaps, combining our high-performance Instinct AI Accelerator, EPIC CPUs, and networking product portfolios with ZT Systems, industry-leading data center systems expertise will enable AMD to deliver end-to-end data center AI infrastructure at scale with our ecosystem of OEM and ODM partners. It's just a fancy way of saying NVIDIA does everything in-house. They can get it all done. We need to be able to do the same exact thing NVIDIA does if we're really going to be able to compete with them, right? Now, that leads me to talk about Lisa Su in general. You got to understand, when you're buying this company, you're buying a company with one of the greatest CEOs in history, right? I would say she's definitely, in my opinion, probably the greatest female CEO in the history of the public markets. And just in general, if you're going to compete her against everybody, she's definitely up there. She's like one of the GOATs. When she got at AMD, you got to understand, I got to take you back there. This was like a $2 or $3 billion market cap company versus a $200 billion plus market cap company now. AMD was a joke. No one respected AMD when Lisa Su got there and after she was there for just her first year or two. No one respected this company. The stock price was under $2 shortly after she took over as the CEO of this company. Like, no one believed in it. And she made this into one of the most incredible big tech companies that I wouldn't be surprised if in the future AMD is eventually a $1 trillion plus company. And to think that this company was, a lot of people thought this company was going to go bankrupt. I'm going to be honest with you guys. Back in those early days of her being CEO, it was in a bad spot, and she completely turned this show around. Insane. Now, additionally, AMD is really the only company that has any sort of competing product offering with NVIDIA. They're the only ones. They're the only ones that can really compete with NVIDIA over this next 5-10 years. And that's pretty darn special, because when you think about how big NVIDIA's opportunity is over this next 5-10 years, and then you think about AMD's like that next lever up, in my opinion, of that big opportunity, woo-wee. I made a lot of money on NVIDIA stock, obviously, right? I don't own any more shares. I've sold out my position completely. Not that I think it's going to be a bad stock. It's just, I think there's better places to put money, right? And I think AMD is one of those best places to put money. Now, here might be the best part in regards to AMD. This might be the best thing of everything. The stock trades cheap. The stock trades at a 31 forward P. Now, keep in mind, AMD is probably going to smash numbers, analyst expectations in 2025. So that forward P is probably like 25 to 27 right now. But this is far too cheap for AMD. And the reason being is when you think about AMD's opportunity over this next 5-10 years, right? In regards to AI, the data center, the gaming segment coming around, right? The embedded segment. I mean, and obviously the client services business. I mean, this is an incredible opportunity with this company. And I don't think this is something that should just be overlooked by folks, because I think there's a lot of people kind of overlooking AMD right now. And I'm like, this is a company that's going to have ridiculous cash flows incoming. They're going to stack cash to the sky over this next 5 years. The question is, what do they do with all that money? They could do massive share buybacks if they want and buy a ton of their shares. If the government's a little more friendly as far as acquisitions go, they might be able to do more acquisitions, right? They're likely going to continue to push in regards to having the best chips in the world, which it seems like NVIDIA will grab the title of like the most impressive chip, but then AMD will come back and like they'll have a new chip and it's like, whoa, this is even more impressive in this way, in this way, in this way than NVIDIA. Then NVIDIA will come back. And so those two are just going to go at it for years and years and years. But with that being said, there's an incredible opportunity there. And like I said, there's really the only two companies that are competing against each other that are respected now. Intel's just such a mess that you don't even have to worry about Intel. It's NVIDIA versus AMD, and that's really it. And you can't really come in and compete with these guys because they have the best teams, they have the best strategy right now. And as long as Jensen's leading NVIDIA and Lisa Su's leading AMD, I don't see anybody being able to come in and really compete with these guys in any substantial way. And so that's that. Now, additionally, I spoke about this company recently in this particular video I did 9 days ago. I'm buying a new stock. It has 147,000 views so far. So if you guys didn't get to check out that and you want to hear me talk much more in depth about AMD, you can definitely check that video out, right? And the last thing I'll cover in regards to AMD, is there a point where I'm not interested in buying AMD shares anymore? I would say if NVIDIA goes over 200, I'm good. If AMD goes over 200, I'm good. If AMD goes to 175, I'll probably start slowing down my buys. But if it goes over 200, that's probably a level that I'm just like, I'm good with whatever I have at that particular time, and that will be that. And then I'm going to see how the company develops and how the numbers start to come in 2025, 2026, and then I'll figure out, like, what do I want to do with the position? Do I want to cash some shares after that point in time? Do I want to continue to roll? But yeah, I think the stock should be very fun over this next 24 months. We'll see what happens with that, but I think it's going to be a very, very fun time indeed. Alrighty, guys. So that leads us to stock number 2 of 5 here. That's a phenomenal opportunity, a phenomenal buy, and a stock that I think is going to go up quite dramatically over this next 24 months and has very little downside risk over the next 24 months. And that stock is Nike. Ticker symbol is one, NKE. So Nike, the great thing is, I don't need to tell you what Nike does. Everybody watching this video right now, you know what Nike does because you've been marketed to probably 85,000 times in your lifetime from Nike, right? No, Nike is, first off, it's a company I've always had an immense amount of respect for. It's never been a company I owned until very recently because the stock's gotten so incredibly attractively priced, but it's always a company I had the most respect for. Steve Jobs had the most respect for Nike. Like, literally, Nike was one of the most respected companies Steve Jobs ever looked at for what they were able to do with that company, right? They sell a commodity, as Steve Jobs would put it. They sell a commodity, but when you buy a Nike product, you feel different, and it's unbelievable what they've been able to do with that company over time, right? Now, and by the way, I would have never thought I would have been able to get this stock at $70-something. Like, this is just an opportunity of unbelievable proportions. Now, basically, there's been CEO changeover very recently. Elliott Hill just took the helm at the company back in October. Okay, so now Elliott Hill was a kind of a legendary figure in regards to Nike, and he got passed up for the CEO role back in 2020. Instead, the board of directors made probably the worst decision in Nike's history, and they made a guy from a consulting firm background the CEO of the company. Not really a true Nike guy. There's John Donahoe guy. He was not a true Nike guy. He was, worked for other companies. He was really consulting background. And those folks, they just don't make for good CEOs, especially for storied companies like Nike, in my opinion. There's a whole different mentality that goes into those sorts of folks versus this sort of guy like an Elliott Hill. So now the board of directors realized they effed up bad. They effed up really bad in hiring John Donahoe, right? And so they got Elliott Hill coming back here. I think he's going to make tremendous, great changes in regards to Nike over this next year or two that's going to put them back in position to be on top again, right? And I know the workforce at Nike is extremely excited about Elliott Hill taking back over. But I've got to be honest with you guys, because that board of directors made such a bad mistake, it allowed a lot of other companies to breathe finally in the space. Because Nike, they're so competitive, and They've always understood how to win, right? That it's been hard to breathe if you're anybody that has to compete against Nike for the longest time. But thanks to the board of directors of Nike, these other companies have done tremendous. Deckers, look at Deckers' 5-year stock price, up 646%. Oh my gosh, right? They own the Hoka brand. On, which owns obviously the On brand, right? Thanks to the board of directors of Nike, the stock's up 234% in the past 5 years. And so that John Donahoe made so many bad decisions. And basically the way I would put it is Nike over the past few years was kind of like when Michael Jordan went to play baseball for a while, right? You guys remember that? Jordan went to play baseball for a little bit. That's been Nike's most recent kind of period here. So the moral of the story is we're past that period. We're going into the Elliott Hill story. This story gets a lot more exciting in 2025, 2026. Now, additionally, this matters substantially. Nike announced, this was back at the end of last year, right? So we're coming up on almost a year of this announcement. Nike was going to have to lay off workers. They're going to do a $2 billion cost-cutting plan. So the great thing for Elliott Hill is he's actually going to come into a company that is at least lean, right? It's going to be a very lean company. He's going to be able to really push up, I think, profitability of this company immensely, although that's not going to be his main focus. His main focus, I think, for the first year or two is really going to be on revenue and getting market share back and getting the brand in a great position again. And then from there, I think because they've done all those cost-cutting measures in 24 into 25, I think you're going to see the margins in the earnings per share fly over the next few years, essentially, okay? So the moral of the story is like he's actually getting set up into a pretty decent position here overall, right? Now, as far as Nike, the good thing for me in regards to Nike is this stock's still a buy for quite a while in regards to stock. Like if it goes back down to $70, I'll be picking up more shares. If it goes to $100, I'll still be picking up more shares. Like it's still a buy for quite a while in regards to Nike, and I like that, right? It's not like I'm like, oh, if Nike goes to 85, I got to stop buying. No. This is still my buy category for quite a while, okay? All right, guys, stock number 3 of 5 here. That's a tremendous opportunity is Sofi Technologies. Sofi Technologies is a $15 stock. Stock's up about 63% year to date. Now, Sofi is now my 6th position in the public count. That's an active position that is up over 100%. Very exciting. It's a long way from Tesla's 2,500%, ELF's 1,695%, but it's getting there, right? And so 6th position for me to be over 100%, and I have no interest in selling any of my shares, honestly, in the public count at all. You're going to understand Sofi. So Sofi, the way I would look at it is it's in the cross sections of fintech and new age banking. And so fintech is because their Galileo platform. Also, they do a phenomenal job of kind of being a middleman, taking fees. Basically, they can kind of be a middleman. Like, let's say somebody comes to Sofi for a loan, but Sofi doesn't want to actually take on the risk of that loan. They might be able to sell that off to somebody else, right? Take a fee off of that. There's so many incredible opportunities Sofi has there overall that would basically puts them in a position of being more of a fintech company and taking fees, rather than worrying about taking banking risk, okay? So that's something to keep in mind in regards to fintech side of Sofi. Then additionally, they're really a new age bank because they have no locations, right? They're a digital first company. They really, really resonate with the younger generations, Gen Z, the millennial generation, right? I think they're going to do tremendous in Gen Alpha. I think they're going to be the number 1 best positioned bank to attract Gen Alpha over time. So SoFi's in a sweet spot. I mean, really a sweet spot in regards to this company. And a lot of it has to do with this man that's led the company for the last, probably 6-7 years now, Anthony Noto. Anthony Noto, he got brought over, was it a couple years before Rona, right? And then obviously Rona threw somebody like Sofi for a loop. It was a whole situation to go through, right? There was a student loan pause that caused a lot of harm to the company short term. Then there was inflation. There was obviously interest rates changed dramatically. There was just a mess of a lot of different things all at one time, right? But Anthony Noto's led the company through all of that mess and out to the other side, which has been incredible. Now, the additional thing I've really respect about Anthony Noto is not just that he's done a heck of a job running the company, right, and getting the company to this place and getting the numbers to this place, right, and getting them through the storm. But it's something like this. I don't know if you guys remember this. This was just over a year ago, back in November of 2023. News came out. Anthony Noto makes a $300,000 stock purchase. The CFO also bought shares, and the stock was in the 6s at that time, right? And the man's not afraid to put the money where the mouth is. Basically, when you see a CEO like Anthony Noto buying stock, he's basically saying like this stock is stupidly priced. Because you got to understand, especially CEOs and CFOs, they usually get granted so many stock options that for the most part, it doesn't it just doesn't make sense for them to buy their own stock, like just straight up, like out of, just open market, like let me just buy shares, unless it's at such a stupid price that they're like this is doesn't make any sense if I don't make this move, right? And so I appreciate that. Like Anthony Noto was basically giving us a signal right there of like, guys, this stock is like ridiculously priced. I'm going to put in a few $100,000 right now, right? So that was that. Now, legendary. Look at SoFi's revenue. I mean, is that not a perfect stair step there? If that's not legendary, I don't know what is. Incredible. This is very important. What has transpired very recently with this company? Look at this. This is what I call the flip. The flip happened, folks. The flip is when a company goes from a massive money loser to start losing a little bit of money and then makes profit. That's what happened in regards to SoFi. They pulled off the flip, and now the fun begins. Because now we're no longer talking about how much money is SoFi going to lose. Now we're talking about how much money is SoFi going to make. What are their earnings per share going to be positive next quarter? What's their net income going to be next quarter? Not what their net loss going to be next quarter. What's their net income going to be? And that's a game changer for SoFi forever. Now, additionally, you look at SoFi, it's around a $16 billion market cap or so. But you look at versus like big traditional banks. I mean, those big guys are at hundreds of billions of dollars market cap. Look at JP Morgan Chase, $700 billion market cap roughly. I look at SoFi, and I think the way Anthony Noto's positioned this company, this brand, the tech side of the business and everything, I honestly think he's positioned it so this can become the next major banking giant, the next financial giant. And I think that's going to play out over this next 10, 20 years. And so I think SoFi has the ability to grow from this little guy company of like a $10 billion market cap, $15 billion market cap, into a company that eventually we'll see being a $100 billion market cap, $150 billion market cap, or, dare I say, several $100 billion in market cap if we look out 10, 15 years from now. And so that's an incredible opportunity there because you really haven't seen anything that exciting in the banking space for honestly really like generations. It's been such a long time since you've really seen an incredible opportunity in the banking space, in the financial space. And this is one of those very few opportunities. And so SoFi, definitely a game changer. Now, there's a great book. One of my favorite books I've read in the past few years was this book called Mastering the Market Cycle by Howard Marks. And in that book, Howard Marks goes into the market cycles, right? The ups and downs of those market cycles, right? And how to identify them and all those sorts of things, right? And identifying companies that make it through to the other side, all that stuff, right? And in the banking space, you got to understand it's a lot about market cycles. So in the banking space, it's all about when times are good, making as much money as you possibly can. When times are bad, make it through. And don't get in a weakened position because of that. Make it through stronger than your competitors. If you can do that, time after time, as you go through recessions and whatnot, you grow stronger and stronger and stronger into the next cycle. If you want to know how JP Morgan became a $700 billion market cap Goliath company, they did that because they made it through so many various storms. They acquired a lot of companies over time, and they did absolute magic. So for SoFi, it's very important that they get through the next recession. They don't go belly up, and I don't believe they will because Anthony Noto is positioning this company where they're not going to take insane levels of risk. He makes sure he really, really, really keeps a close eye on leverage ratios in regards to the company. You got to understand, Anthony Noto used to work pretty high up actually at Goldman Sachs many, many, many years ago. And so he's got a lot of that investment banking experience that really understands this game on a high level. So the moral of the story is, I like SoFi. I like SoFi a lot, and I think they have a chance to become a giant in the financial space. I also believe this might be the next Palantir. So Palantir is now a stock I'm up 719% on. It's unbelievable, right? But Palantir for a long time was very misunderstood, and that's why the stock went under $10 a share back in 2022, right? It's a very misunderstood stock. It's still actually a misunderstood stock. I heard somebody call Palantir a cybersecurity company recently, which was a very interesting way to describe Palantir. Okay. So misunderstood to understood, right? And it's definitely something we could see be playing out in regards to SoFi over this next bit of time where people start to get it. They start to really understand this is not just some, play on student loans or whatever they think in their brains at this point in time in regards to SoFi. And so, yeah, pretty extraordinary opportunity. I really like that one, okay? Alrighty, next one up here. Number 4 of these 5 stocks is Cheesecake Factory. I love some cake. $49 stock here today. It's up 41.5% so far this year. Been a very good performing. Now, cheesecake. A lot of people, really talk about this stock, pay attention to it or anything like that. I think this is one of the best easy money plays in the entire stock market I found. Like, absolutely. game changer in regards to Cheesecake. And the reason being is they have their Cheesecake Factory concept, which is an ATM machine, right? We know that. Go to any Cheesecake Factory just about in the world any night, and it's going to be freaking packed in that place, okay? That's a straight ATM, straight cash flow. But additionally, they have two major concepts that have now proven enough that they're going to be a success, that they're going to be able to expand these concepts around the entire United States of America, right? And that's the North Italia concept and the Flower Child concept, right? And both of these concepts, like they've built enough locations now for it to be no question, like these concepts are going to be able to be in every big city, if not multiple locations in every big city across the United States of America. And that's incredible because you really can't find any other company that has two proven concepts that are going to be bangers over this next decade, right? Now, additionally, they have the Blanco concept, which is more Mexican food and culinary dropout that are in testing phase. And those ones are getting close to the point where you might actually be able to expand those around the United States of America as well. So which means you might end up having two more concepts coming behind these two that are going to be the next big concepts as well. And so it's just ridiculous because like how many other companies really have that where they have several different brand concepts that are going to be huge around the United States of America. It's ridiculous, right? Now, when it comes to Cake, their latest quarter numbers, this is a grade A in regards to their income statement. The numbers were an absolute banger. Their revenue was up to $865 million from $830 million. Additionally, their total costs and expenses dropped from 97.7% of revenue to 96.1%. So the income from operations went to 3.9% from 2.3%. And so their income from operations went to $33.7 million from $19 million. So basically the profitability of Cake is going up immensely. And I really don't think this is going to slow down in the short term. I think it's going to continue to go higher in regards to Cake. Now, additionally, the company pays a very sweet dividend. So I'm making money on the stock going up, which I think is just the start of that. And I'll show you my projections in just a minute. I think there's a long way to go there. But additionally, I get to collect dividends on every share I own. They pay me 27 cents per share I own every 3 months, right? Now, additionally, look at this. Prior to Rona, right, and they had to close all their restaurants. We know what happened in Rona, right? They were paying a 36-cent dividend per quarter. I think they're going to go back there, and I believe they're going to start increasing that dividend again in 2025, which is pretty darn exciting because basically I think we're going to get into a cycle here in regards to Cake where they're going to be launching more locations of their restaurants, bigger dividends, way bigger profits, and likely buying back shares all simultaneously. Like, as a shareholder, what more could you ask for? Stock goes up, dividends go up, right? Share count goes down. What more can you ask for? Like that's the trinity right there. I mean, oh my gosh, it's a thing of beauty, right? And so I'm looking at stock, right? And I own $110,000 worth of shares in the public account. I own a bunch of shares in other portfolios, my Patreon portfolio, private accounts, everything like that, right? I'm up to 2,222 shares in regards to Cake. I'm up $30,000. It's the easy one to keep buying. I don't care I'm up $30,000. It means nothing. The valuation is still too attractive because look at this. Check this out. Look at the forward P of Cake. Forward P of Cake's 13, right? You look at something like Chipotle. So Chipotle, 47 forward P. Look at something like Cava, 225 forward P. Now, Cava obviously has massive growth over the coming years, right? But they just have one concept, right? It's the Cava concept. Do they really deserve to trade at, 15 times or whatever the forward P? I don't know. I don't know about that. Like, they deserve a premium, in my opinion, but that substantial? What about Chipotle? Chipotle's best growth days are long gone now at this point in time, right? Chipotle can continue to grow, but their best growth days are long gone. And then one trades at around a 48 forward P versus Cake's at 13. I think there should be somewhere in between these two, considering that Cake actually has an ATM and Cake additionally has multiple growth concepts coming behind them that are going to be extraordinary opportunities. So I think it deserves to be higher than here, maybe not up to a 48 or certainly up to a 225, but maybe in the 20 to 30 range I think is pretty darn appropriate here. So here's my projections for Cake. Basically, I've been doing 8% revenue growth per year, 2025 to 2028, which I think is very doable here. And then as far as net income goes, I have them getting to net income of over $200 million next year. So 8% revenue growth on average, $200 million in 2025 of net income, right? That grows to $234 million in 2026, $262 million in 2027, and $293 million in net income in 2028. Puts them in net income margins in the 5% range in 2028. Earnings per share, probably 5 $5.80. If they do big share buybacks, maybe they get to $6 plus at that particular time. 20 to 30 P is, I think, pretty fair if this company's going to be growing, let's call it 10% plus bottom line, 8%, somewhere around there, roughly revenue growth, right? Which puts the stock around $116 to $174 in 2028 and gives me a compound annual growth rate of 24% on the low end, 37% on the high end for Cake. So yes, Cheesecake has some pretty incredible opportunity over this next number of years. And like I said, it's a dividend play. Plus, the forward P is just so dang attractive in regards to this. And you might ask me one last question here. What about recessions, right? Because I think that's always fair. Restaurant industry, consumer recession, what happens there? Listen, we've seen this company go through Rona, which is the worst case scenario. There's nothing worse you can go through as a restaurant than your restaurant being closed or only allowed to be partially open. That's the worst. Like, you'll take a recession any day over that. So we already have seen this company get through the worst time of the worst time, which is you're not allowed to have customers. Like, there's nothing worse than that. Additionally, if we take that a step further, right, we also watched them go through the highest inflation that we've seen the restaurant industry go through in, honestly, decades, right? Like, that's insane to think about the level of inflation all these restaurant chains had to go through, including Cheesecake Factory in 2022, and it was very, very devastating. And they made it through that. So when you add those two together, I feel pretty darn comfortable. I also watched this company go through the great financial crisis as well. Now they're going to be even a much more diversified business because they're not just counting on Cheesecake Factory. I feel pretty darn comfortable in this one overall. And so I think it's a company that just makes it through anything and grows stronger and stronger and stronger and stronger. So that's Cake. All right, guys. Fifth one of these 5 stocks up here that is a buy is Celsius Holdings, the energy drink company, right? Stock's been devastated this year, down 47%. This is a combo buy with also Monster Energy, MNST. So about $2 is going into Celsius for every $1 going into Monster here. Now, Celsius, I'm up to 2,000 shares in the public count. It's a $57,000 position. I want to get to about 2,500 shares. So I'd like to add about another 500 shares, ideally, to that Celsius position. And then as far as Monster goes, I'm at 444 shares. I'd like to get this one to about 550 shares, roughly, there as far as Monster goes. Now, additionally, when in regards to Celsius, and by the way, you might say, why am I doing a combo buy there? The reason being is, just in case I'm wrong about Celsius, Monster is going to be the biggest beneficiary if I was wrong about Celsius's brand and all those sorts of things. And so Monster would be the biggest beneficiary, so it just makes sense to kind of do a hedge there, right? Now, in regards to their numbers recently, they've obviously been very disappointing in the last couple quarters, and that's really because of the over-inventory Pepsi had from that deal that they started a couple years ago. That's going to not be an issue, in my opinion, going into 2025. And so they're likely setting up for very easy comps, especially at this time next year. So they should start to show major growth at this time next year again. This is inside my private stock group. There's been quite a few folks that have been started to buy the stock in my private stock group here very recently, it seems like, right? A lot of interest since the stock's been so devastated. A lot of people are looking at the stock like $25, $27, $28, $30, and they're like, I think Celsius looks pretty darn attractive, right? So this is one of our private stock group members posted this one. And you got to remember, no one heard about Celsius 5 years ago. To see it had this sort of presence in grocery stores and all different types of stores is incredible, considering no one cared about this company 5 years ago, right? So we posted this. Orlando Airport knows to keep the Celsius on hand. Nice display of Celsius there, right? This gentleman posted this. First thing to see when you walk in into the cafe at my work. Big Celsius coolers right there. And the product moves, man. It moves phenomenal. This one was fascinating to me. Somebody in my private stock group posted this one, right? This is on our Marriott checkout page for add-ons to your reservation. You can add a Celsius on there. And just like that's a beautiful thing about Celsius. They've really outcompeted everybody in the drink space over this last number of years, and just trying to see who, partnering with everybody who's everybody, and just get in the, I got to give the CEO so much respect, and the management team of that company. They've outflanked not only everybody in the energy drink category, but just everybody, period. It's been unbelievable to watch, and it's a brutal industry to compete in, right? This might be my favorite. One of our private stock group members was watching one of my videos. I don't think I was talking about Celsius here. I think I was talking about Elf, but they had a Celsius in their hand, right? That's just beautiful. It's everywhere. On prime display at the grocery store I visit. Huge display, obviously, for Celsius right there. This one was quite interesting. Walmart Burlington, Canada does not even stock it. So it just shows to show you there's still, a tremendous amount of opportunity for Celsius International. Like, Celsius has hardly even expanded international. That's really if you really want to talk about the 2026 through 2036 opportunity for Celsius, it's really international, right? 2025 is really getting the company back into growth in regards to U.S. channel with the Pepsi and everything that's going on there, right? Now, in regards to Celsius, my kind of deal is I'll likely buy the stock on and off until it reaches about $37. Once it goes over 37, I'll probably lay back on my buying in regards to this one. It's definitely a stock I like. It's a pretty good opportunity here. It's just a question of how good of an opportunity is it. That's really the only question in regards to Celsius. So we shall see over the next number of years, okay? Appreciate y'all joining me as always. I hope you guys enjoyed today's video. Once again, if you want access to my entire library of premium courses, plus access to my private Discord chat, ability to see those stock moves I'm making, exclusive weekly videos from me, that will be the pinned comment down there. And we just got our 2025 cards in for my private stock group. Our Steel membership cards, we got the 2025 in. Yes, very beautiful, very beautiful. What stock is it? Do you know what stock it is? I don't think you do. And then we have our 2025 Steel membership cards for 1000X in as well. So anybody that joins 1000X or my private stock group, or both, you'll get your Steel membership cards likely mailed to your house. Alrighty guys, much love as always, and have a great day.